On real world tokenization, super hot topic in the crypto industry right now. We're going to be talking about where traditional finance meets blockchain innovation here. And we've got a lot of great panelists that are going to be coming to this stage. So I'm going to read out their names, and then when they come on stage, if you guys can make noise, cheer, make them feel welcome. We're almost at the end of the event, but let's still have the energy, yeah? Awesome. Cool. So we've got the head of investment strategy at Arbitrum Foundation, Brendan Ma. Head of emerging tech at ADGM, Dmitry Fedolov. Metaverse Committee Chairman at the Ministry of Economy and Tourism of the UAE, our honored guest today, Khalifa Al-Jaziri Al-Shahi. And we've also got the founder and managing partner at DWF Labs, Andrei Grachev. I've got the CTO at VeChain, Antonio Senatore. And finally, the Chief Strategic Partnerships Officer at BN Crypto, Alevtina Labuk. Ladies and gentlemen, please welcome your 6 panelists onto the stage.
Hi everyone. Today we have one of the most trending topics in the industry, the hype topic of RWAs. I'm even not sure whether it will be enough time for us to cover it in detail. Let's start first asking all of our panelists to introduce themselves so that you better understand the background and the impact that they're going to bring to our discussion. Brandon, let's start with you.
Thank you so much. I'm Brendan. I'm head of investment strategy at the Arbitrum Foundation. We support the Arbitrum ecosystem, which is a layer 2 that now secures over $18 billion of value across DeFi, payments, RWAs, and consumer and many other use cases.
Thank you. Dmitry, could you please introduce
Hi, everybody. Good to see such a big crowd here. Of course, not as big as when Pavel was speaking. My name is Dmitry. I'm the head of emerging technologies in ADGM. It's in Abu Dhabi government. So I'm a regulator by day. I have very deep industry background in blockchain and AI. And my day-to-day job is basically creating regulatory frameworks for RWAs or utility token issuance, or fun things like flying cars and AI models and quantum computing and robotics and so on and so forth.
This panel is going to be specifically top level because we have an honored guest. We have the chairman, Metaverse Committee, Ministry of Economy and Tourism with us. Could you please share a little bit about yourself?
Hi everyone, good afternoon and thanks for being here until now. So as she said, thank you again. I'm the chairman of the Metaverse Committee of the Ministry of Economy and Tourism, and lucky to have this title because this is the first time where a government have a title for such Metaverse initiatives. Of course, aside from that, also I do work in the ministry in the commercial regulation laws, family businesses, and all the agencies law and all the laws that has to do with how other authorities like DEDs in the entire UAE, like 40 plus DEDs and registrars will follow these laws, whether they are mainland or in free zones, to be in line with building our future in the UAE and Dubai in specific. So that's why having someone with this title in that part of the government is something unique. And I hope we can enable all the creative thinkers with us today to be able to legally be able to have projects crypto related and reward asset tokenization. Thank you.
We are honored to have you here. Everybody already saw Andrei here, but those who came only for Pavel. Andrei, please introduce yourself.
Hey everyone, I'm Andrei Grachev. I am managing partner and co-founder of DWF Labs and Falcon Finance. In terms of reward assets and tokenized RWA, we already cooperate with several tokenization vehicles. We just joined Tokenization Alliance together with Xtalks. We integrated many of tokenized stocks and assets like gold, like Tesla, MicroStrategy, etc. And I do believe that we can have a great discussion today. Yeah, thank you.
Thank you. Antonio, please.
Hi, thanks everyone. Thanks for coming today. Thanks for having me. I'm Antonio Senatore. I'm the CTO of VeChain since 2021, so it's 4 years now. Not sure if you know VeChain. We've been around for a while, since 2015. Launched mainnet 2018, so quite some time. Layer 1 initially based on track and trace, supply chain verification, and we evolved over the years into sustainability asset. And so RWA for sustainability. Before I was the global CTO for Deloitte in the whole crypto space and blockchain in general for a number of years.
So today we have a really top panel. We have the government, we have the business side, we have the technical side, and that's why let's start with the big picture. All we know that 2025 was extremely volatile. Bitcoin going up and down, everybody speculating on the altcoin seasons. At the same time, the institutions started to bring a lot of big capital through RWAs. Everybody remember the Robinhood case this summer, of course. And at the same time, the legal framework became more and more strict, more and more intense. So if we are looking at all of this picture and all of those elements combined, my first question will be on the institutional side here for the investments, of course, Brandon. How do you see the general impact on the industry from big money coming to blockchain through RWAs?
Yeah, it's a really good question. I think we're well and truly in the era of institutions for crypto. And what does that mean? You know, over the last 12 months, we've seen multi-billion-dollar companies go public. We've seen Wall Street embrace digital assets, cryptocurrency. We've seen tokens or tokenization plays by some of the biggest institutions in the world on blockchains that we all know and love. And I think, why is that important? It's important because that institutional market is extremely significant. And I think we're still very early. You know, on Arbitrum, for example, we're now approaching about $1 billion of tokenized RWAs on platform. And yet when you think and take a step back and think about the institutional opportunity, public equity markets globally are over $100 trillion, right? There's real estate, there's private credit, and I think we're moving towards a phase where almost every single asset that can be more composable, that can unlock liquidity, that can be accessible across different markets, will go on this march towards tokenization. So it's a phenomenally significant opportunity, and it's something that basically every institution in the world is trying to grasp with both hands.
That's 100%. Before RWAs, we perceived it more like another narrative hedge, so that we can just secure from the volatility. But now it's the corporate strategy. And I will ask Andrei to share his thoughts on this topic.
I think RWA in the industry, that it doesn't work. Works now? Oh, good. There are two things that are contributing to the whole market. The first thing was tokenized stocks, right? There are many arbitrage opportunities for traders, right, who trade TradeFi and who trade crypto, which creates volumes of these assets, right? On the other hand, there are many tokenized products that can. Thank you. Yeah, this one better. I think this one should be replaced. Yeah. Yeah, now it's much better. Yeah, first of all, it's arbitrage opportunities. The second one is unlocking like crypto-native yields. Now many banks, and I know that, for example, Societe Generale, in cooperation with one of Morpho curators, is tokenizing its fixed income products and runs looping strategies on Morpho. And this is the distribution that never happened before. And with tokenized nature of reward assets, these products is going to be available for like 24/7 trading and settlement. And from my point of view, in a few years and the near future, right, these two markets should merge to each other and yeah, and unlock like 24/7 weekend settlement and looping strategies and DeFi transparency for TradeFi assets. Yep.
Dear Khalifa, may I ask you share also your feedback from the governmental point of view? We see that We see that currently the economical trend is changing, and big money, they're also driving new waves of adoption, and they're impacting the society. From the governmental side, how do you see it impacts the society in Arabic Emirates?
I mean, so I think the first word I will say it's positive, and many people think that regulation is a barrier. And we consider the regulation actually is a runway, which means we need to make sure we path the way for the technology to be accepted. Because as we are all aware, that development is much faster than the regulation maturity or the regulation development. That's why what we see in Dubai with VARA, for example, is expert-driven and authority. And if you notice also that there is never ever, even me being in the government, all our laws take like 1 to 2 years revisions before they go out for testing. With VARA, because we didn't have time, we took it out when it was a draft. And then we learned and modified it and took it out as a final version, which will keep on being modified to cater for the market. So as you are aware, with the real world asset, it's not like normal utility tokens or whatever. It's more about having something backed up by physical asset. And like, for example, real estate, like we've noticed recently, like gold or whatever other commodity. And what the government does with us, like what we're trying to do to make sure that everything is audited. So that's where the government comes. We're not coming to block anything. We're coming to enable, learn from our mistake, adapt, modify, and move forward. Because as you're aware, the future is being built in Dubai, and we can't build it if we don't do that.
So generally, we can say that we need to bridge the technology and the real world value together. And the government will ensure that the process is safe and secure for everybody here. But still, the technology is pretty emerging. So Dmitry, how do you approach it?
Yeah, thank you. Can I see a show of hands? How many of participants here own something that is backed by real-world assets? Okay, so I think, guys, whoever didn't raise their hand, I think you just don't know this. So guess what the most tokenized asset in the world is?
It's US dollar.
Exactly, very good. It's a US dollar. So if you own USDT, USDC, PUSD, whatever, you own a real-world asset.
They all have to raise their hands now.
Yes, most likely it's going to be a bigger group of people. So my point being is that the traction that we see this year, this rally of RWA story and rally of stablecoin story is interconnected exactly because of this. Stablecoins, they drive liquidity into the market, and they are used for tether. I'm not referring to USDT, just as a tether from old economy into the digital economy. And the inflow is then being used to develop the technologies necessary for tokenization of real-world assets. And as demand grows, frameworks that we enact, so we as regulators, our pain points are a little bit different. So we onboard the leaps in technology that Arbitrum and VeChain and other networks made. But we always are on the side of the consumer, so how do we protect the consumer from being harmed?
That's for sure. And actually bringing real world value into the crypto actually brings more trust and more adoption. Adoption means that more and more users want to do that. And that's why infrastructure, though developing faster than the legal environment, still need to adjust to a lot of new users coming. And technical aspect here is the most important. How to make all this technology for RWAs secure for all those masses, but still very easy to navigate. Because centralized exchanges learned us all the easy way to to trade with just one click. But still, the longer the chain is between the value and the final holder of this value, the more gaps in the system. Infrastructure should be very well thought and secured, because more gaps can appear. And I ask Antonio to share with us some insights on specifics of building infrastructure for RWAs.
Yeah, I mean, we've been doing this for a while now, so we know the way it is. I mean, we are at a blockchain conference, all right? So blockchain is a secure platform, is a trust machine, is a truth machine, is by nature a blockchain, a trail of record of things. And so that's the first element. That's why RWA is pushing now, because you can do that. You can tokenize US dollars on chain quickly. You can tokenize anything else, and that's really the main thing, the first point. And why it's pushing? What it gives blockchain to us? What is the main point? Why we are all here? It gives the reach. You can reach more people. It's inclusive, all right? It is inclusive. Anyone can get a wallet within seconds and start playing with it. Now you have multiple aspects of that, and it depends what you are tokenizing. If it's a US dollar, then so it's a stable coin, then your main problem is not the tech, but who is tokenizing it, because the tech is there. You know it works. That's the first, so the safety of the asset. And that comes with regulation, really. The famous Genius Act, MiCAR as well in Europe, etc. So that's one aspect. Second aspect, tech, is custodial solutions. Now, folks, I'm in this business since 2016, okay? When I was in Deloitte, 2016, my job was to start telling the institutions to prepare for custodial. Be ready. This asset, Bitcoin, at the time I was talking heavy about Bitcoin, it's going to be there. It's going to be something you're going to use. It's going to be something, may become a reserve currency, may become the new digital gold. I got laughed into rooms, out of rooms many times back in the days. Now it's a thing. And custodial solutions are there. There are multiple things. They're fairly secure. We see every now and then some hacks, etc. But to be honest, there is a fairly vast offering for custodial. So who owns that, the asset for the user, both from the user side and from the issuer side? Then there is another aspect. What are you? If it's digital, it's about the issuer and it's about the verification on chain. Stablecoin does that. And that's a whole different, that's all a product side of things. How do you do that, and how do you trust a network, etc. Then there's, if it's not digital, it's physical, it's a problem of tagging, and you get into a whole world of tagging solutions, etc. Then you go down, okay, now it's tokenized. How? Then it's token standards. What standard are you using? And what are you tokenizing? And when you have something, I spoke about network, I said inclusivity. What people want from an asset on chain, they want to make some yield, some revenue. You're talking, let's say it's a solar panel. I own a couple of fractional ownership of solar panels on VeChain. We have done that for VBetterDAO. And then you have to, have a token standard that guarantees that the smart contract is audited, the yield comes to the user that owns the asset, cannot be drained. And the standards are there now. There's a few, there will be more, because then it depends. And then down the line to the wallet, to the end user. And again, there are custodial, non-custodial. You have your seed phrase, you play with it. And custodial, where you use custodial solution in multiple ways, on-chain, hybrid solution with social login nowadays. These are all great stuff that can be done. But there's one aspect of all, and it's really, in the end, is product and application. You're going to connect somewhere, and you're going to have to trust that thing that you're connecting to. And that's the network. That's the security that is given by the network, by the community. And that's the blockchain, That's an overview.
Sure. The blockchain is first of all, built on trust, on the systems that ensure that trust is there by default. But as you mentioned exactly, it's also a question of business ethics and negotiations. And this is why the role of the government is essential in these topics. Dear Mr. Khalifa, could you please share some of the initiatives that the government is doing to ensure the security of the end users who are looking for the new money with all this new technology?
See, I think many of people already living in Dubai, and for all our great visitors, it's good to talk a bit about the tokenization sandbox that was happening in Dubai. I mean, maybe not many people know it's a sandbox, but it is a sandbox between Dubai government and the central bank, where they decided actually to tokenize real estate. And maybe many people even doesn't know that this tokenization that took place in Dubai, and there was huge success. Like you will notice that a full asset that usually will take a couple of months to sell will be sold in less than 3 minutes. And there is like 20, 30,000 users in the queue who got nothing. And the minimum ticket was 2,000 dirham, and you can have multiple. So this is a real example to show that real-world asset tokenization in real estate is becoming a reality, and this is stage 1. Stage 2, actually, where they will have it, because in stage 1 it was only for UAE residents, not whoever have an Emirates ID. But now they are moving also to allow it to be for anyone from anywhere in the world. And the third stage will come that they will allow people to tokenize assets, real estate assets from the plans also. And more to come on that aspect. So we are having like trial on ground. We learn from it. We're moving with some updates at the beginning of next year, but it's a successful trial.
So with the support of the government, it turns into the social phenomenon that actually help people to find new opportunities for their life. And in this aspect, Andrei, what do you think, how the final users are going to be impacted? Is the aspect of RWAs only for the big investors, large investors, or like for everybody? What is the threshold for people to join this new beautiful world of RWAs?
I think the biggest benefit of RWA, right, and especially liquid RWA, for example, tokenized gold or tokenized stocks, and especially gold, is to allow like retail users and normal people to buy some assets with a small spread. Because, for example, if you go to a bank and you want to buy gold and then sell gold, it basically makes no sense because you would like to lose a lot just because of spread, right? You can take a look at tokenized gold, let's say from Tether or whatever else. It's trading like with less than 1% spread. It's easy enter, easy exit. And another thing that tokenization allows tokenized reward assets and their holders to extract crypto yields, right? Because let's say you have, again, gold without any yield. And then gold is a great collateral. It's liquid, it's widely tradable, and it is gold, right? And then you could go to DeFi markets, use your tokenized gold as collateral, and do some, farming strategies, or borrow stable coins and do other strategies, right? It's like a very proper leverage with a very proper underlying asset. And I think not only institutions, but also normal people should benefit from this, of course, yeah.
And I see Dmitry has something to add here.
Yeah, just to expand on that. So I have 2 points. One on actual success story of real-world asset tokenization. The second one on your point about security. So my go-to example of a successful real-world asset tokenization is the St. Regis Hotel in Aspen. Some of you may have heard about this. I think it was in 2022. So the St. Regis decided to tokenize about 20% of the property and fractionalize it and sell it. And the remaining 80% were sold in traditional ways. So at its height, the tokenized part of the property was selling at 200% premium because the liquidity was there. There was always a market to buy and sell. You didn't have to go through realtors or through all this traditional chain of bureaucracy. So it's a great example, and if you haven't heard about this, look it up. It's really very exciting how they did this. My second point is when we as regulators look at RWAs, our main concern is this connection between the asset that is being tokenized and the digital representation, a token or an NFT or whatever it is. That's our biggest concern, because we know the tech is there, and it's not even really that breakthrough of a tech. So what we are doing, we are looking at things like smart contracts. We require audit of smart contracts whenever they are changed or on an annual basis. We look at oracles that draw information from off-chain. Custody and legal attestations. So it's really something that the public expects from a regulator to verify. So when we are giving away a license or a registration for an operator that is allowed to issue real-world asset-backed securities, we always go by the book and make sure that the underlying asset is always there and it's tethered to the token.
Thank you. And when we are talking about the user experience and the adoption potential, how they are impacting your decisions when you are defining where the investments should go for an Arbitrum Foundation?
Yeah, I also want to just expand on what we've just heard too. I think that idea of partnership and consultation and just thoughtful ideation from the regulator's perspective, from an economy's perspective, is the exact type of thing that helps the technology succeed. It helps commercialization as well. And I also think, it's a very good example for what the UAE does that gets looked at across the rest of the world as well. You see a lot of, hopefully, harmonic progression in regulations and standards, not just here, but across the rest of the world because of that type of leadership. I think on the user experience side, one thing I always think about is the best blockchains are invisible blockchains. And what does that mean? I think ultimately, if you think about every major transformational shift in technology, in the use cases and adoption across not just a very niche audience, but across the mainstream, you want a technology that is invisible, that is seamless, that has extremely good UX. You don't even know the blockchain under the hood. I think Robinhood is probably a great example of that. In June this year, Arbitrum announced that Robinhood would be tokenizing a suite of equities for customers in the EU and building over time their custom L2 for tokenized assets as well. Fast forward to today, if you are a Robinhood customer in the EU, through their own interface, through their app, you can now trade close to 500 tokenized stocks. There's been, and we're very proud of this as well, as of today, over 10,000 transactions of these types of assets, all for an aggregate gas fee of about $130 US, right? And so when we think about the opportunity, when it comes to tokenizing assets, and it can be real estate, it can be equities, it can be all sorts of assets, it's about increasing inclusion, increasing accessibility, increasing the types of use cases that are seamless so that customers don't have to understand the technical complexity and can actually just trade, use technology that works.
Actually, it's usually the most difficult thing to build the invisible technology, because the more seamless it is for the end user, the more difficult it is in development. And I'm pretty sure Antonio can share with us a couple of comments on this.
Yeah, no, it's a good one. The invisible blockchain. Yes, it's true. But there is one aspect, because I was discussing this, believe it or not, a couple of days ago with my UX team. It's how invisible that can be. There is a fundamental shift that happens when you are in the Web3. You have an asset in your hands, and the whole thing changes. You see an asset and you say, all right, this is, I don't know, USDC. It's a real estate thing, a fractional ownership of a real estate. It's, again, a solar panel. It's a sustainable action done by someone. You see that, and then you say, okay, what can I do with this one? How can I monetize it? Can I stake it? Can I lend this somewhere as a collateral and get more money? So the whole concept changes into, yes, you don't know what blockchain you have, but you know you have tokens. You know you have tokenized things. And that's, from a technical point of view, the user experience is different from a Web 2.1 that we had before. That's why it's a shift. That's something we are seeing constantly. And we got to remember that Web 3 is a technology, first of all, for relationships, for networks. And so then now what you have beyond that, beyond the token, you also have the network. And again, your user experience changes again. There is some similarities when you're on Facebook and you have your friends, that's your network, or on LinkedIn, that's true. But now you have assets and network. What do we do there with that? So from a technical point of view, which is UX really, it's not really technology, that's what you need to look at. And again, in the Web3 space and in the real world, once you have this, there's a final aspect, which we probably have VeChain, we have taken to the extreme. We said that Web3 is a technology where the users are business partners. That's the way we see a VeChain. We have seen some aspect of that in Web2. TikTok, Instagram, you generate content, and you get paid for that, but there is an intermediary. In the crypto space, for VeChain, we see the user as a business partner. So what we can do with the user, what the user can do for us. Now imagine the RWA space. Now the user is a business partner. What can it do? Can generate RWA itself. What is a user-generated RWA? VeChain, we tried successfully. We have generated 50 million sustainable actions. That's an asset. So users are able every day with their wallet and they're writing, on Twitter, so it's becoming part of my life. They walk, they generate, they get rewarded for that. That's a sustainable action gets on chain. It's an RWA. It's data. You're getting paid for your data. They have a fractional ownership of a solar panel and they get rewarded for the electricity and their CO2 emissions. So the user here is now owner of assets, has a network, and is a business partner. That's a big change compared to Web2, a massive change. That's the future. That's where we see it.
And I see Andrew has a comment here.
Yeah, I agree that it is a big change from Web 2 to Web 3 because less intermediaries and center and sensor, right? And the very important thing is trust to a tokenization framework. Because let's say we can use this tokenized asset to borrow funds, I don't know, or to trade it or do whatever, right? And in the end of the day, right, for example, we can lend money, I don't know, for tokenized gold, right? And in the end of the day, we need to be able to liquidate this gold. And if there is no secondary market, we need to be able to go somewhere and take this physical gold, right? And if we don't have trust to the tokenization framework, this market will be developed very, very slowly because people will be afraid to give this money, people will be afraid to lend this money or buy these assets. And this is framework very, very important part.
Yeah, thank you. And definitely many projects, they try to prioritize this business part, this UX part, etc. And sometimes they sacrifice the security on this, especially in emerging countries. Dmitry, how do you make sure that the projects do not neglect security for the sake of better business and UX results?
Great question. I mean, it's fundamentally kind of a dilemma, almost philosophical. Where do you cut, on user experience or on security? So obviously you can have your crypto wallet, self-custody crypto wallet encrypted with your seed phrase, and you keep the seed phrase very secure. But a lot of people are opting for convenience, like with social logins or other types of kind of making a shortcut for convenience, face IDs, whatever. So this is unfortunately happening, and it's not for the regulator to decide whether or not the user is allowed to do that, because it's ultimately the user's decision. What changed, I think, is that the frameworks caught up. So with enactment of MiCA, it's arguable how successful it is, but anyways, it's setting some standard. With ADGM's DLT regulations, with VARA's framework here in Dubai, I think it's called ARWA framework, ARWA, the new framework. With Arbitrum's new throughput of 40,000 TPS, yeah, and sub-penny transactions, that enables a lot. ERC 364 compliance is very important. And custody, BitGo, Chainlink is basically custodying 93 billion or so of tokenized real-world assets. So we just got to the point where the infrastructure is stable enough and verified enough. And just to give a short kudos, I'm not an investor in VeChain or anything, but I know Sunny Lu for about 10 years. And this is a perfect example of an invisible chain. I know that this is not exactly what you're referring to, but VeChain powered Walmart in China. Yeah, recently UFC as well, and nobody knew about VeChain. Like still, people generally just don't understand how much traction is real world traction is behind VeChain. So big shout out to VeChain guys, keeping it real for 10 years.
Thank you. Thank you.
And of course, security can be not only technical but social, because many people that don't know how psychologically approach this phenomenon. They don't know how to make the limit, how much they can invest, how much they are ready to lose, etc. So for the government, it's very important to keep the social, cultural, when these new phenomena are happening, because many people are treating it almost like gambling when they think that money will just multiply if they put it there. How does Arabic government treating it? Could you please share, Mr. Khalif?
To be honest, this is the thing that why we have limited the token size. So it's like 2,000 per token, for example, with the real world asset in the real estate. Another aspect also, it's like you can take unlimited tokens, just like we're trying to make sure, since we are doing this as in a sandbox, like everyone have a very little risk. So if the government and the real estate agents are learning on the process, at least the ticket size are very small. And another thing, like with the ARWA we talked about with VARA, this is a very interesting topic because I told you in Dubai, we don't wait for everything to be complete. We start taking off and we fix the flight on the sky. And we always reach high. So when the first real world asset project started with Prepco in Dubai, they didn't have that part. So they were doing the tokenization, they were selling the tokenized deeds, but then the actual homework is still done manually in the background by Control-Alt, for example. So now this is coming up with the new version I was talking even about without mentioning the name, is that they will have two tokens actually. Like a token will be responsible for how things and the rights are moving, and another token which will be always held by the government for the real custody. Because you're aware about Dubai Land Departments already using blockchains for many years ago. So that's also another way to secure people's rights. Because whatever happens, if this side disappears, you always can go back and mint your tokens again from the track record of the government. So they did like this duality to ensure still we are testing, but testing safely.
Yeah, actually it's a very rare balanced approach, very thoughtful, very good one. So just to have it as a blitz, 1 minute per person, let's look into like 2-3 years. I'm not even taking 5 years, it's too much for crypto. What are the main 3 words that will define the future of RWA? Brandon, let's start with you.
3 words, only 3 words. I think access. Ultimately, I think this trend is all about inclusion and access, and we're already seeing really interesting opportunities for different types of participants in the market to get access to assets around the world. I think there's going to be a lot of collaboration, you know, where our philosophy is not just across the ecosystem and across industry, but there is a real appetite to collaborate on the regulatory side. I think with more and more positive developments and engagement, that is just something that's a positive for the industry overall across many regions. And probably everywhere. I think about everywhere a lot in the sense that crypto has gone very mainstream. I think, you know, if we were talking about this topic, we were talking backstage about some very interested, forward-thinking ideas, RWAs, AI, but 2008, 2013, right? And timing is everything. I think we're in a moment right now where there is understanding, there is will, and there is appetite to really engage and push this forward. And I think many assets will be tokenized, many opportunities will emerge everywhere.
Tokenize everything, everywhere. Your 3 words that will define the future of RWAs.
Interoperable, institutional, and inevitable.
Okay, short and sharp. Your words, please.
So I would say trust, access, and integration. So trust in the regulation and the infrastructure. Access will be available for everyone to be with small tickets they can go in, and integration will be the good thing to bring integration from the blockchain, metaverse to the real asset actually. Thank you.
I love the social aspect here. It shows the care about the nation. Andrei, your 3 words.
Everything liquid, tokenized.
I like how different words define each of you. Somebody is on the institutional side, somebody is on the money side, if we can say so. Your 3 words.
Yeah, it's kind of alternative user AI, and what I mean by that alternative, I mean everything, alternative assets. What we're doing now is we're tokenizing assets. We know they exist in the real world, and we're tokenized, but can we tokenize value that is on chain or that we are generating on a daily basis? And so user-generated asset, at some point, it goes back to the user to start generating RWA for the companies to maybe leverage and make money with the user. That would be a good one. Or maybe it will be the time AI will start generating RWA, will generate value at some point, and that value will need to be tokenized. Or maybe AI itself will be an RWA. We will see. But it will go into that direction. It will be both.
That's for sure. Thank you for our speakers for today's panel. We are done for today. Have a great evening.